Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.
Welcome to another episode of the Tech Behind FinTech. Depending on where you're watching us from, either good morning or good afternoon. I'm excited for my guest today, John Shammas. He is the Chief Growth Officer at DriveWealth, and we're going to have a great conversation today. John, how are you doing?
I'm doing great. Happy Friday. Thanks for having me. Excited to chat today.
Excellent. Before we get into it, let's just do some basic housekeeping. We are streaming live from Facebook, LinkedIn, and YouTube. We also have a separate stream going from Instagram. For my Instagram folks, when I look that way, I'm saying hi to you guys. Okay, with all that said, today's topic, the 17-year-old behind a fintech giant, powering global investing. Note to say, John is not 17 anymore, but he started his career in fintech when he was 17. That was 10 years ago. It's very impressive. And I'm going to get into it. Let me introduce John officially and read his bio, so you can learn more about him, and then we're going to dive into everything. John Shammas is the Chief Growth Officer at DriveWealth. In his role, he was responsible for increasing end-user engagement and expanding the range of products offered to investors worldwide. John joined DriveWealth in 2015 at 17 as one of its original employees, determined to make a difference in attracting young peers to the investing world. He led the original creation of DriveWealth's API platform, leveraging his skill sets in product design and software engineering. His dedication and collaborative efforts with DriveWealth's partners in deploying new, globally accessible products led to his rapid advancement within the company. Prior to assuming his current position as Chief Growth Officer, he held various roles within DriveWealth, most recently as Chief Product Officer. John has also led software delivery and sales team within the company. Before joining DriveWealth, John worked with early-stage startups and venture capital firms across the US and Europe, providing consulting services on brand direction, product design, and software architecture. He holds a Series 7 license and is a frequent public speaker, appearing at several TEDx events, technical conferences, and educational seminars. John, extremely impressive. Number one, I absolutely love it. And prepping for this show and reading your bio, I'm going to say you inspire me. Just real talk, man. I've been in this field for a long time, and definitely just love everything that you've done in terms of DriveWealth and your passion for technology. So how I want to begin this, right? I want to get into you. I want to get into DriveWealth. I want to get into the brokerage aspect and how it's empowering investors. And there's so many things to cover, like 24/7 trading, all that. Let's start with you. So I'm reading your bio on your website. You learned Photoshop at 3 years old. Talk to me about that.
I did.
DriveWealth is like, he's done this, and DriveWealth. Like, what was he, like 1, 2? Like, stuff before. How did that work out?
Well, first of all, thank you very much for the introduction. And it's a little crazy hearing the numbers even for me, because I can't believe I'm going on my 10th anniversary here at DriveWealth, actually in a few weeks. So did not expect to be part of this business for so long, did not expect to spend this long in the financial services industry, but really fell in love with it very, very quickly. But to answer your question, yes, that goes all the way back to sitting on my dad's lap, who's a creative director, when I was 3 years old, and saying, "What are you doing on the computer? You know, show me some of this." And sort of instantly fell in love with the idea of being able to make visual graphics and be able to control this machinery that didn't mean much to me at the time. So always had a really innate love for computing and software. Um, and throughout my educational years, found myself gravitating towards computer programming, which at the time, I was probably learning via YouTube or some online blogs, and learned to code at a really young age, probably when I was 9 or 10 years old, and sort of put all the worlds together in trying to blend how can I help build software and also help build visual graphics, and that led me to the branding world. So a lot of different talents that sort of culminated together, and led me ultimately to the role I'm in today.
Yeah, I love the story and I can identify with it because, when I was 9 or so, my sister, she had, well, in our high school, we went to the same high school, we majored in computer science, right? So my mom got her a computer. This was a while ago. And at the time, there was a language called like Basic A. So
Hmm.
I, some big toy. It was like a huge toy to me. And I was like, I want to play games. And to her credit, she gave me this book. It was a bunch of games where you had to program it. And she said, okay, if you copy this program, you could write a ping pong game. I looked, I was like, all right, that's cool. So, I didn't know the concept of debugging, and I thought
Hmm.
if you're copying it, you're going to make mistakes. So anyway, I'm an end goal type of person. So my only goal was the game. And once I figured out how to play it, I was like, I'm done. I just want to play the game. You know, I took it like you and said, you know what, let's do more and more. But I was like, all right, playing the game, and okay, this game is cool, but I don't know, Nintendo has like better games. I'm done with this. So I love the fact at that age you stuck with it, because there's a book escapes me, right? But the concept, if you look at all the greats, people look at the things they've accomplished, but they don't realize how young they started and the parents' role in really contributing to that growth and that singular focus growth. And watching them as they accomplish these things, but also helping them along the way. So can you talk about the relationship with your dad as creative? And for those that don't know, what exactly is a creative director, and how did that, impact your life?
Absolutely right. I think it's amazing to think about my current role and how much it's sort of the perfect combination of what both of my parents do, actually. So my father, being a creative director, he has for the last couple of decades worked on designing brands and designing packaging for consumer goods. So, for example, I think when I was 3, my dad was probably working at maybe Estee Lauder, working on creating packaging for different fragrances and cosmetic items. And so we used to go down, the aisle of a grocery store, and he would pick out a box on the shelf and say, "Look at this text. The letters are too far apart, or the line height needs to be bigger, right?" And I would just look at him like, "Oh, okay." But that attention to detail and that interest in creatively, how do we make things more visually appealing, definitely stuck with me. And interestingly, I think where I am today, I obviously work on Wall Street now, and I have a brokerage related role. My mother actually worked on Wall Street for probably about 15 years until she had me. She used to work almost right next door to our office at DriveWealth today. And funny enough, one of the reasons I learned coding was when I was 8 or 9 years old. I had an assignment from a teacher to create a fake restaurant. And I haven't told a lot of people this story, but I had to create a menu and create, an example of what like the logo would be, right? And the restaurant I wound up creating was a restaurant that was like a tribute to Elvis, because my mother's favorite singer in the world was Elvis, and it still is today.
Nice.
So I created this whole restaurant around, with all these funny puns in the menu. But I just sort of happened to say to myself, like, what does every restaurant have? A website where you can go see their hours and the food and whatnot. And that was actually the first coding project I ever did, was how do I create a website for this little fake restaurant? And I used platform called GeoCities. I don't know if many people remember what GeoCities was, but it was a service, I think, run by Yahoo to create your own website, and sort of started peeking at the code behind the scenes and learning more about what are these funny characters and what does this all do. But yes, to your point, where I am today, it's amazing how it sort of combines both of my parents and their interests.
Your previous role before the chief growth officer, you were chief product officer, and I see that directly relating to your father as a creative director. Obviously, with the financial background your mom has, I mean, it's a direct relationship. Did you, with the financial background, did you talk to her as you were growing up about it? Like, how did that process work?
Actually, not really. I got to be honest, I never expected I would wind up in financial services. It was not something that I had an incredible interest in when I was really young, like while I was a kid. I can remember Mad TV being on in the house when I was growing up. So, there was a little bit of that financial education maybe in the background. But honestly, before DriveWealth, I, as you mentioned, spent a lot of time with startups in a variety of different sectors. So I spent time in consulting for healthcare, consulting for transportation, all sorts of different industries, never really finding the one that is gonna hold me, right? Gonna really grasp my attention. When I joined DriveWealth, there was a very, very sudden shift in, just a couple of months of spending time here, where there's a number of things that interested me that, I can certainly go into detail on. But I think one of the major ones was finance is so innately important to every single one of us. It impacts every single one of our daily lives. But so much of not only this country, but the entire planet, so many people don't understand the inner workings of how the stock market works, how stocks prices go up and down, how, just how to invest, period, right? And so being able to insert myself in a world that was so applicable and so transformative to so many people, but being able to learn this knowledge that is almost like this, this sacred information that's so hard to get a hold of, because a lot of financial education is still sort of mystical. That's a lot of what really grasped me and kept me in finance.
No, I love it. And I want to ask you now. So, how did those opportunities come about? Because you're coding at 9, 10 in your BIOS, like going still working actively in 11. So there's a gap here between when you start DriveWealth, but you're getting clients for websites and different things like that at such a young age. How did that come about?
I think it was a lot of good timing with the way that the overall freelance market expanded at that time. Prior to the early 2010s, if you were an independent web designer or an independent web developer, a lot of your day-to-day was probably marketing yourself and trying to find gigs through connections, right? And in the early 2010s, or maybe a little bit before that, there was this advent of companies like an Upwork or these freelance marketplaces where you could go and pitch for projects that other companies had. And luckily, those platforms do not say this designer is 12 years old when you go and apply for them. So for a lot of it, for me was how can I source my own opportunities through these networks that are just starting to become popularized, and sort of hide behind this veil of look, I'm just a regular old web designer who's been doing this forever. But obviously earning those opportunities on merit, earning those opportunities on my own portfolio. I think one of the lessons I learned very young was you have to just be constantly working on projects. Those projects could be personal, they could be meaningless, but you have to have an end goal in sight. Just like you mentioned before, like having that end goal of I want to, play this game or beat this game. There has to be an end goal that you're working towards. A lot of individuals, when they try to learn how to code, they'll go and take a class that teaches them, here's how conditional statements in JavaScript works, right? Like they'll find that YouTube video and they'll try to learn JavaScript or Python, by these sort of like abstract concepts like that. The way that I always learned was, I want to go and build a game. I want to go and build a restaurant website. I want to, achieve this end very, very tactical result. And along the way, I'm going to find 60 different problems that I'm going to have no idea how to solve right now, but I'm going to have to try in some way to go and navigate them and find the knowledge that gets me to the answer. And so I think that style of learning wound up helping me produce a fairly extensive portfolio of projects pretty quickly. So even when I was a young teenager, I would be able to say, hey, company, you're looking for somebody to build you a website or build you a logo. Here are 30 logos that I've designed, see if this matches with your brand. And 29 of those logos were probably like fake businesses that I came up with in my head, but it's still logo work, right? It's real portfolio work. And I think, again, for a lot of people learning and coming into the career, that's not the way that they approach how to get that knowledge and start off.
In those early days, because I'm a fan of Upwork, been using it for around that time, even before that you mentioned. So in those early years when you were doing this, did your age ever come up? Like, how did you, and I'm asking these questions for others who can start early as well. Did your come up, and was that a hindrance, or how did you navigate it?
Yeah, that's a really good question. I would say in a lot of cases it did not, but I also had the benefit of the fact that there was no Zoom. So there was no, let's get on a video call and like talk through this, together. I think if there was, there may have been some interesting eyebrow raises. There were a number of clients that I would work with on multiple projects that obviously they would, realize like, okay, this guy has to go to school from these hours. So there must be some, difference than the normal, designer that we hire. But I think the biggest hindrance was not lower expectations from a client. I think usually clients saw the output, they were getting the results that they needed. And so there wasn't many cases where somebody wouldn't want to work with me because of age. The biggest hindrance, though, probably was it was very difficult for me to determine the right way to price my work, to value my work, right? And so, there were probably many jobs that I did when I was, even an older teenager, 16, 17, where I was probably pricing at a quarter of market rate because I just didn't know. I had no idea, right? I would pick a number out of the hat. Would you pay me X per hour? And they'd say, oh my God, of course, because it was probably significantly less than what they were used to spending. And that's really, really difficult to get the right, to find the right approach to really figure out how to value your own time. I think nowadays for salaried workers, there are more data points that are more publicly accessible. There are websites like Levels where you can go and see Levels.fyi, where you can go and see what does the average designer make or programmer make in a variety of different segments. For freelance projects, for independent employees, I think that's a problem everybody has, but it's definitely harder for somebody who's just starting out in the industry and you're trying to get that client and you're hoping and you're praying that they say yes. You don't want to go too high, right? But at the end of the day, you have to stick up for yourself and make what you're worth.
And then sometimes, your price gets determined by your cost of living and things that you need. Like, I absolutely can't afford to do it for this rate because it's not going to pay my bills. So I'm going to look for an opportunity that's going to pay more. In your case, you're in high school. Like, what's your biggest expense, right? You're
for sure.
You're like, you know what, dude? Look, a quarter of that, that's cool. Like, I'm still winning. So I could understand that. But in turn, right, it helps you get more clients and build up this awesome portfolio that leads to more opportunities. Out of curiosity, with, now moving forward with the DriveWealth opportunity, was that something that came from the referrals of all the work that you've done, or was it an Upwork opportunity? How did that come about?
Yeah, it was actually a recruiter that I knew at the time in my network that introduced me to the founding team at DriveWealth. Again, did not expect, hey, I'm looking for a 10-year opportunity, right? I joined thinking, okay, this could be interesting. And actually, one of the things that one of the reasons why DriveWealth was such a compelling proposition for me was a very interesting point of timing. So that year, I had been invited by Apple to go to their annual developer conference. And at the developer conference, if you've ever watched the Apple keynotes or the Apple addresses, you may have seen that they give out design awards. And that was something that was always very interesting to me because, again, this background in design and creativity, I loved this concept of giving out awards to the best app designers, right? And one of the award winners that year was Robinhood. And it must have been the first time that a financial firm had been given a design recognition, right? I mean, at the time, 2015, think about how bad probably your banking apps were. I mean, it took forever to get basics in the financial services industry and, in digitizing them. So I saw that happen. I was in the audience when they gave that award, didn't know anything about Robinhood at the time, but started looking at it and looking at the space. And then I think the next day after I flew home is when I met the DriveWealth team. And so it sort of all clicked together. And I said, okay, something's happening in the financial sector right now where we're starting to get more digitization, more, modernity. Like we're starting to move that industry forward. DriveWealth might be at the cutting edge of that. And maybe I can interact with that space by nature of working with DriveWealth.
And before we jump now into DriveWealth, for the audience, just so you could understand, DriveWealth powers a lot of the major fintechs that you use on a daily basis. You might not have heard of DriveWealth, but you've heard of Revolut in Europe. You heard of Cash App, Stake, Via Trade. You might not have heard of Unified Money, but definitely Cash App. So the investment features that you see on these fintech apps, that's DriveWealth in the background. So that's how huge it is. I read somewhere you guys just got like a $550 million investment, or is that accurate?
A couple of years ago, that was our Series D raise, probably 2021, 2022.
I want to paint that picture for the audience to just say like how big this opportunity for John was and what they grew into and so forth. Now, with that understanding, let's rewind. So you now in DriveWealth, you come on as a developer, right? How was your work experience? How are things going there? Because you came up with the API, their API product and stuff like that. Can you go into that?
So when I joined, interestingly, the mission and concept, well, I'd say the mission is very similar to what it is today. The way that we were attempting to accomplish that mission changed a lot over the course of the last couple of years. So when I joined in 2015, the mission, to put it very simply, was how do we get the millions of people all across the world who have either no access to investment products or very little access, how do we get them involved in the financial ecosystem? And this was a mission by our founder, who had run very successful businesses in prior jobs with different asset classes like currency exchange and things like that. And so he noticed this big gap where there were just a lot of people who couldn't invest in major stocks, major ETFs, major fund products that every person should have access to. So at the time when I joined, the goal was, let's go and build up an app that we can deploy in many, many markets across the world, all of where we find that there's not sufficient access to capital markets. So for example, I would go and work on apps that we could go and deploy in China or the UK or Brazil, all across the world, right? And I think you'll find, and we can certainly talk about how in most markets outside the US, there are varying degrees of access to international investment products. And in large part, there's usually customers who want to buy Apple stock or Microsoft stock or Nvidia or these big brands that they've always heard about, right? But again, that access, there's different gradations of access. So that's what I was working on when I joined, and we saw pretty decent success with that. We had hundreds of thousands of customers, all in different parts of the world. I'd say mainly concentrated in probably North Asia. But at the end of the day, building a business like that, it's incredibly dependent on marketing cost. Because if you truly do want to go and attract 500 million customers, right, or even way less than that, let's start with the first million customers, right? There's a customer acquisition cost for every single one of those customers. And when you're doing that across potentially 100 different countries, you also have to really understand each one of those customers. What culturally is different? What do we need to do to attract that customer to our platform? So as we continue down this road and we're growing the business steadily and we're seeing more customers, but we're not rocket shipping to 100 million customers overnight, right? We're just gradually growing the business. We start to get approached by a number of different foreign firms or domestic companies that say to us, hey, we would love to take that technology and just put it inside our own experience, because we already have 10 million customers, but we don't have any investment access. We don't have an investment product, but we'd like to, right? And so I think a good example would be, let's say you're a bank in Asia and you have a very local specific banking product, and maybe you have some small access to local investment products. But again, your customers probably know about big US stocks. They probably know about the S&P 500 and they want to, take part in that. How do they do that? And so companies would come to us and say, hey, can we leverage that technology that you've built to achieve that and give that to our customers? And we trialed that out with a number of different firms. And that's where this idea started of, what if we could, instead of deploying an app, deploy an API-based platform where other engineers, other companies could tap into our technology via those APIs. And that's what really sort of started building the rocket ship for us, right? Because all of a sudden now, instead of paying a customer acquisition cost for every single client that we're trying to access, now we're working with companies that have 50 million customers, right? And we can take investing and we make it a tab within their application. And now all of a sudden, those 50 million customers, when they wake up tomorrow, they don't need to say, I'm going to go search for an investment product. They have one, right? They have one in their ecosystem.
And that's so cool because it's so in line with your mission. Like, the goal was to get investing, let more people globally start investing. What better way to do it, right, than partnering with these apps with an existing customer base to spread the word? Obviously, like you said, your customer acquisition cost is now zero because they're bringing on their own customers. What's the maintenance? So people can understand, right? First of all, because I know we're not everybody manages the API, right? Application programming interface, right? So that's how other apps can connect to your app and bring in the functionality so it can be present in your app without building it themselves, right? So what they're building is the connective tissue. Just want to throw that out there. What is the maintenance on that? So as you introduce more partners and you have their you have your application within theirs, how does that work? Can you explain to the audience?
It's a blend between us and the other companies. And I think what we set out to do very early was, we recognize that the investment space in particular is incredibly complicated to build infrastructure within. There's an immense amount of knowledge that you have to have, an immense amount of potentially business partnerships in order to make that work. And so our goal was, how do we make all of that invisible for our partners? And so if you want to go and build an investment product tomorrow. How can we help you do that without you having to understand, how do I connect to all the stock exchanges? What stock exchange takes what order? How do I actually move the cash and shares between somebody who's buying a stock and somebody who's selling a stock, right? All of that work is what we try to make invisible to you within our tech platform. But to your point about maintenance, from our perspective, the investing landscape changes literally every single day. And some of those are small changes. Some of those are things like regulatory changes and infrastructure changes. Like, for example, you mentioned it briefly before, but all of the stock exchanges, pretty much all of the stock exchanges in the US are going to change their trading hours. That's a change that we need to interact with and build a lot of technology to support. But that's something our partners don't have to build for, right? Because they're sitting on top of our platform that handles those ongoing changes for them. And there are much more strategic things that we look at. Like, for example, over the course of the last 2 or 3 years, there's been an explosion in interest in bonds because interest rates are much higher. So that means bonds are paying a lot more on an annual basis. So we saw this macro trend and started building out bond infrastructure within our system. Again, something that is fairly invisible to our partners. They don't have to go and do, all of this work to figure out the bond ecosystem and where bonds trade and things like that. But what a partner does have to do is they need to understand their local customer very, very well and figure out for that local customer what is going to make sense to them. What are the types of investment products that they want to buy? How do I present them with sufficient education that it makes it clear to them how to get started? How do I give them customer servicing that makes sense for that region, that age of customer, that level of wealth of customer, right? So that's where that partnership comes into play. We're never working with the end customer, the person who's buying that stock or buying that fund. But we are providing a lot of that infrastructure to make it easy to just focus on that side of the business.
Oh, that makes absolute sense because, it's too many. Like, that's their core business, is their customers, because they already have a platform that customers are using other features outside of investing, but so this is just an added feature. So you're behind the scenes. So obviously, from a support level, the customer will call them, and if they need additional support, then they'll get in touch with your people to figure it out. You mentioned the regulatory changes. How big is that in your industry? Which obviously, it's huge, but talk to me about that. How do you keep up with that? How does that work with DriveWealth and also interact with all your partners?
It is pretty immense, to be honest. And I think this is one of the reasons why there are not as many startups that are looking at the investment space or looking at the brokerage space. It's an industry with a lot of regulatory moat, with a lot of people that you need to hire, right? There's a lot of requirements to doing business in capital markets and brokerage services. I think we were very lucky in that, again, our founder had run a number of similar businesses in the past. And so he started DriveWealth with a number of people who were very, very familiar with the regulatory obstacles in brokerage, who have done this before. But just to give you an example, it probably took us the first 3 or 4 years of the company in order to get to sort of our first level of regulatory licenses that we wanted to have to do this business. So
Wow.
it takes a long time. And after that, there are additional things that we had to go apply for and seek, approval on and seek permission from our regulators. Ultimately, I think most people would agree that regulation in this type of industry is largely a good thing and a necessary thing. But it definitely keeps out a lot of companies that I'm sure would like to interact with this market that just can't because of those hurdles. And I think that's where you see in adjacent markets like cryptocurrency, it feels like there's a new startup every single day trying to take on, I'm going to issue a new token or I'm going to start a new chain, right? And in the brokerage world, things move a little bit slower than that.
And since you brought it up, crypto, is that something that DriveWealth will integrate with their partners, or do you keep that separate?
Yeah, it's something that we've looked at a lot over the course of the last couple of years. Um, to date, we've kept it fairly separate,
Okay.
but I don't know that that will be the case permanently. Again, I think there are a lot of amazing companies doing very, very interesting work in the cryptocurrency space. Where I think we've spent more time instead is we think we have sort of taken the equities universe and really made a compelling proposition out of buying stocks and ETFs, and we think we're a real specialist in that area. But we recognize that stocks are not all of what everybody wants to invest in. There are other important investment products to the everyday investor. Again, one of those is bonds, and so we spent a lot of time on bonds. Another one is mutual funds. Many Americans, especially, have mutual funds in retirement accounts. So that's a very active instrument. There are many investors, more aggressive investors, who want to invest with options. So that's where we've been spending more of our time. Is let's take more of the traditional asset classes that similarly have difficulties in accessing, like stocks, and let's try to innovate there. And who knows, cryptocurrencies or something in the crypto space could come in a next wave.
No, that makes sense. I was going to also ask you out of curiosity. So right now you mentioned a lot about U.S. equities. U.S.
Mhm.
equities. Do you see DriveWealth taking on other equities from other markets around the world and integrating that into your system?
I think it's a certainty, and it's just a matter of time and in what order. Again, for now, we've been sort of a U.S. specialist, and I think the reason why we've stuck to that is because there is such a global interest in those products. Those are the most applicable products in the world, right? Every single market wants to have some exposure to a U.S. company or the U.S. market at large, and it's been that way for a long time. But there's a lot of interest in London Stock Exchange instruments or trading on the HKEX in Hong Kong. So we definitely recognize that interest exists, and it's something that we'll certainly build towards, but not sure on the timing quite yet.
Got it. Got it. So earlier we kind of briefly mentioned 24/7 trading. Can you explain what that is and the impact from like the global market?
For sure, for sure. So up until now, the stock market in the US, I think most investors know it as being active or being open from 9:30 in the morning until 4 p.m. in the afternoon. And so if you are ever watching CNBC or you're listening to the radio in the morning, you hear at 9:30 the big bell ring inside the New York Stock Exchange, and that starts the market. And then you hear the same thing in the afternoon to close the market. So I think that's what most people are used to. They're used to, if it's dinner time and you pull up a stock, you're going to see what it closed at. You're not going to see something moving right now. Um, Over the last couple of years, there's been more of a push to get regular investors into or have access to the extended market sessions. So most of the exchanges here in the US, in addition to those core hours, they also operate a pre-market, which is usually from 4 a.m., and then a post-market, which goes until 8 p.m. So for a long time now, exchanges have actually supported a much wider range of hours than what we typically hear when we hear the bell ring, right? Most exchanges have supported that 16-hour window. And again, that pre-market and the post-market, most regular retail investors haven't really had much access to that until the last 2 or 3 years, where more platforms have started opening up access to those extended hours. Now what's changing is all of the, I shouldn't say all, but a lot of the exchanges in the US have been major proponents of trading 24 hours a day. So actually changing the hours of those exchanges to effectively never stop, meaning at midnight you could trade whatever stock, and at 2 a.m. you could trade that stock, and it will just constantly work, right? And, I think there are a number of reasons that this has become very interesting. One is because of this increase in global interest and global access to the US market. If you're sitting in Asia, you're very used to the market only being open while you're asleep, right? The US market. The US market for you probably opens at 9 p.m. or 10 p.m. And so it makes for a very awkward experience of investing in the stock market from places other than US time zones. So that's been one major driver. Another major driver, I think, has been markets like cryptocurrencies, where they've sort of proven that institutional players, big firms, can interact with those markets 24 hours a day and don't need a break, right? And I think as those markets have gotten more mature and there's more established players participating in cryptocurrencies, you're seeing a lot of success in keeping Bitcoin open 24 hours a day, right? And keeping cryptocurrencies trading. And so the traditional markets now have had an opportunity to reflect on that and say, can we do the same thing? And it's taking some time. It's still sort of in an embryonic state. There are ways that you can trade 24 hours a day now. There are effectively venues that are not exchanges that will take those orders and handle them. But the New York Stock Exchange, the NASDAQ, all the major exchanges next year are planning to roll out that support as well.
Wow. And, when it rolls that out, how does that impact DriveWealth? What do you guys have to do to enable that for your partners?
Yeah, and a lot of this work has been underway for some time now. But for us, there are some simple things like you can imagine when we have an order API that takes a trade. That order API today or previously would reject that order if it's outside of the regular hours. So there are little things like that have to change. But there are also really big structural things that not just DriveWealth, but the industry has to work on. Like, for example, stocks have things called corporate actions that change the stock over time. So, for example, if one company is bought by another, today we have 8 hours in the middle of the night where we can manipulate those securities, right? Maybe one stock goes away and the owners of the acquiring company get all of those shares. Or let's say a stock issues a dividend. Right now we have 8 hours to figure out how much was that dividend and how much does each customer get. When you start moving into a 24-hour market, those problems get resurfaced because now you can't take a break. You can't just say, okay, I'm gonna spend a couple of minutes trying to move shares from this stock to another because the market's not sleeping, right? And so those are the types of problems that the industry at large is trying to figure out the best way to deal with right now.
That's interesting that you mentioned that. I was also just thinking about the level of support that will be needed to do that, because right now the market closes, certain things happen after those hours from just the technology side, and this is the level of support. So now being 24/7, that adds a whole bunch of other nuances that you have to account for, and a support team globally to really help drive that forward. Let's shift a little bit. What role do you see AI playing in wealth building and personalization and things of that nature?
That's a really good question. There's a lot of different angles that I think AI can take right now, and I think a year from now we'll probably be in a completely different environment than now, because that area just moves so fast. Look, I think right now the use of AI in capital markets and in brokerage is extremely early, and we are just starting to see some very, very basic use cases. One of the ones that scares me the most is you may see that there are some headlines where there's a number of young investors who are using an LLM to decide what to invest in tomorrow. And a lot of times that can be relatively dangerous because LLMs don't know how to reason about technical analysis and fundamental analysis. and they're really just going to spit something out. And a lot of younger people are using that as their financial advisor, which is probably not optimal. So there are some fairly negative use cases, I would say, that exist right now, but there are also sort of the advent now of some really interesting positive innovation and trying to combine AI with financial services in a much more structured way. And I think one of the most compelling use cases is still to this day, if you want to seek investment advice, your options are usually either going to a traditional brick and mortar financial advisor, or downloading a product that is probably hands off and probably fully automated, where you can't really ask questions about your finances. And that brick and mortar financial advisor probably has some pretty significant minimums. They may have some fairly significant fees. And so for the average person who doesn't work in this industry, they're just looking for what is the right thing for me to do. The cost to get that answer is fairly high, especially if you don't have a lot of money today. So the idea that we can eventually use AI in order to coach and to teach and to help educate and provide unbelievably contextual information about how your finances are doing and some of the steps that you should take next. I think that's one of the most obvious and interesting uses of AI. I think most executives in finance now are a little afraid of the regulatory environment and how we're actually going to combine using AI with the laws that exist around giving advice. You know, how those things work together is probably not a solved problem, and probably won't be a solved problem for some time. But I think that's one of the obvious ones, is every person should be able to get financial advice. And how can we extend what is today something that's a little bit reserved for the upmarket clientele? How do we provide that to the average person?
You know what? And that brings me on to another question, right? Because you want to target people globally in different types of markets, whether it's an underserved market and so forth. So if a person, a younger person is watching this, right, and they're from an underserved market, what do you want them to know about wealth building and access?
Yeah, that's a really good question. And I think it's hard to give a broad stroke answer that works for everybody, right? But I do think it's important to understand the access that you can attain with the products that are available in your local market. Seek what access exists, because we're doing a lot of work in emerging markets. There's a lot of startups working in emerging markets. There are probably way more products available now than there were years ago. And I think for every market, there's a little bit of difference in what are the risks that you need to be aware of and how do they apply to you locally. Like, for example, here in the US, if you go and pay a financial advisor to generate a portfolio for you, that portfolio is going to be unbelievably dominated by local domestic stock, right? And your international exposure will probably be fairly minimal, certainly not a majority of your portfolio. In other markets, there's going to be a different outlook, right? Because if you're in an emerging markets, there may be a very small set of local companies that you can invest in, and they may be very small cap companies, right? And so that balance of domestic and foreign investments may not make a lot of sense. And you have other attributes to learn there, like currency risk, right? If you are going to invest then abroad, how do you ensure that you're de-risking yourself from moving your money into a foreign currency, which again is something that in the US, a lot of times most of us don't think about, because many of our investments, if not 100% of our investments, are dollar based, right? So again, I think it's hard to give a one size fits all, but I do think in a lot of emerging markets, the environment is so unbelievably different now than it was even just 5 years ago.
You have a general rule in saying, if they get, let's say their paycheck's 100%, is there a certain percentage they should be allocating towards investing just for long term? Do you have any thoughts on that?
This is a really tough question. I don't think I can give a percentage, but I will say this. Regardless of which market, and maybe I'll use the US as an example because I think it's close to, it's home for both of us. One of the hardest things to figure out, and one of the things that stops a lot of people from investing, is what do I invest in, right? Everybody knows, I think in this industry, that's a challenge, and the industry tries to provide new products that try to answer that question. Maybe AI can help eventually answer that question if we, train GPTs better to answer those questions more realistically. But that's a big hurdle for people getting involved. The second biggest hurdle is tactically, how much money do I move and where do I put it? And in a lot of really developed markets like the US or like the UK or like Australia, part of that hurdle is you have many, many, many different places where you can put that money. So even if I said to you, 30%, take 30% and put it into, an investment product, there's still a question then of, in what way do I put that 30%? Again, I'll use the US as an example, into a 401k, into an IRA, into an HSA investment account? Do I put it into, an account for my children, and an UTMA account? There are all these terms, a lot of vernacular, and a lot of different places to store money. And one of the things that I'm really hopeful that the industry can do over the next couple of years is start tackling that second problem. Again, there are answers to that first problem. There are products that you can download that will say, you don't have to make any investment decision. Give me the money and I will, invest it for you. I'll figure out the right fund mix. But there's still that challenge of, for the average person, let's say you're 22 years old, you're, working your first big career job, you're looking at your paycheck and you're saying, okay, well, some amount got taken out for this thing called 401k. Now what? Should I put more into a regular brokerage account, or should I open up an IRA? It's a really, really difficult problem to solve, and it's very, very local specific. And that's what I hope we can work to demystify for people broadly, because I think that's the next big hurdle, where if we can solve that and make people feel confident that, they're not just investing the right amount, but they're putting it in the right place, we'll all be significantly wealthier and better off.
I mean, the stories that I love to hear. I mean, look, we all love listen, I thought about this startup and I'm a gazillionaire now. It worked out. We got millions of users. We sold it. Everyone's rich, right? Great for the media. But what I really like are like people that have standard everyday jobs, but they were taking a certain percentage of their paycheck, putting it towards investing, and they're like the millionaire next door. Love those stories, man. Stocks are cool. I diversify. I'm big into real estate myself personally, but definitely have different things going on. But I just really, really love those stories where their job wasn't, they weren't making, it could be teachers or firemen or janitors. They weren't making like a ton of money yearly, but they were just disciplined. And then, years, decades down the line, great retirement, extremely a great portfolio, and people are like wondering how. Like from my perspective, what I always like when I'm talking to people, getting started younger, I say, listen, everybody's going to tell you different things, but your biggest asset in this game is time. That's it. So start early. Time is your biggest asset, man, and you'll see things go up, down, up. But if you start early, man, it's such a big benefit there. So, love what you're doing. I know we're getting closer to time. And the last question I have for you, right? Because you mentioned this earlier that you didn't think 10 years flew. You're like, wow, why am I still here? This is crazy. I didn't think I'll be here when I first started. And what has kept you so committed to this company, to the cause, for a decade? I mean, a decade from 17 to 27 is different from a decade 37 to 47 and so forth, right? Like it's a whole different site. Those are two different decades. What has kept you so committed then?
A number of different things. I think one is, I mentioned it before, but the fact that I feel like the work I'm doing is so broadly applicable to such a large population, is something that is really inspiring to me. And look, I still consider myself an engineer, although I don't get to write a lot of code day to day in my current role. But I think for engineers, the thing you want the most is for somebody to use your software, right? Your product. You want to see that in use. And so I love the fact that I can say to a friend, do you have Cash App on your phone? Did you ever see the stocks page? Like, let me tell you about it. I could tell you something about how that works. So I love that aspect of what I do. I love the fact that what we're building transforms itself in so many different ways, in so many different markets around the world. You can take a product that we support here in the US and compare it to a product that we support in, the UK or in an emerging market like Kenya or Brazil, and they look nothing like each other, right? And ultimately, our APIs are the same, right? We run the same technology platform, but the end product that's given to a customer is a night and day difference in terms of what access they have, what products are in there, how the experience looks, right? So I love that aspect of what I do. I also love the fact that working at a startup that has been able to see itself go from, when I joined, we were a Series A company, until now, where, as I mentioned before, we raised our Series D about 4 years ago. Luckily, we haven't needed to raise more capital, but over the course of the last 10 years, that transformation from a corporate perspective, starting at, I think we were probably 15 people when I joined, maybe less than that. Now we're at 350, right? We had a dinky little office in the suburbs of New Jersey that I started working out of, and now we have a beautiful space in downtown Manhattan. In every way, the company has transformed, and it feels like it's been 10 different companies, right? Every single year that I've worked here, I think I could take independently. And if you didn't know that each of those years were at DriveWealth, I could tell you the story of that year, and you would think it was 10 different companies.
Look, John, like I said earlier when I began this conversation, man, you're an inspiration. I love the work that you're doing and just your career in general. It's amazing, man. It's definitely inspiring. I'm sure this conversation is going to inspire others. I know that it inspired me. So I thank you for that. What we do for our guests at the conclusion of our show is this: I'm going to give you the stage and you could tell people how to get in contact with you, more about DriveWealth, and so on you.
Thank you so much. Well, thank you again for having me. Loved having this dialogue. If you're interested in building financial infrastructure, if you want to learn more about it, it's an incredible field. Come talk to me, talk to our staff at DriveWealth. We'd love to figure out if we can work together. If you're a founder and you're doing something in the investing space, maybe we can partner together. Visit us at DriveWealth.com. And of course, reach out to me if anybody has any questions about capital markets and brokerage services, what we're doing, and where we think the future is going.
Excellent. For the audience, it's going to be part of the video now. I put DriveWealth.com on the screen, so it's part of the video. It's also part of the show notes. To all, want to thank John once again for being a guest on the show. I love this conversation. And everyone else, thanks for watching. Once again, subscribe to our newsletter so you can get an idea of who's our upcoming guests. We also have industry news, and it's all for the magic word free. So let me put that on the screen. It's techbehindfintech.com. Give me a second, and so it can come on the screen. It's techbehindfintech.com, and it's it'll be /subscribe. So, want to thank John once again for being on the show. And to all, have a great day. Enjoy your weekend. Like I always say, whether you're watching the show right now, tomorrow, next year, we thank you for your viewership and so forth. Take care. Have a great weekend.
Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.